I'd like to thank you all for sticking around till 4:30 p.m. on a Friday. Honestly, a quick round of applause for you guys. So with me today, I'm going to introduce my panelists. To my right, there's Nader Haddad, who's a principal at Strategy And. There's also Mu'adh, who's a partner at Team One. And we also have Junaid, who is a founder and chairman at Wahed. So today we're going to be talking about finance. And the way I like to set up my panels initially is by trying to introduce the macroeconomic environment. So not too scary. But we know that this is, what I would say is a very difficult time for a lot of people, right? Price pressures, inflation, interest rates soaring. You have a lot of concern about the economic condition of a lot of the economies in the world. But then you have this, dare I say, bright spot in the world, which is called the Middle East, historically known for its wars and troubles and upheavals. But today, we find that it is actually a venue for perhaps asset allocations, perhaps for investors to park their funds away from the volatility that developed markets are offering them at the moment. So, Junaid, I'm going to start with you towards the end.
Cool.
I know that you've been flying around having conversations with different people. So what is attracting people today to the Middle East that the West is not offering them, and why?
It's a great question. So just to introduce what I do, I set up a company called Wahed, which is an asset manager for retail clients. So we are, in a nutshell, in the money business, regulated by some 10 different regulators. So we get a nice little oversight of basically the entire world. And my phone has been blowing up with Americans, basically anyone and everyone in America who's a fund manager, saying, hey, can you connect us with people in Saudi? Because we're looking to fly there next week. Right? So there's a very clear indication in the money world that, let's say, if you are raising capital or if you are looking for money or funding, that the Middle East is the place to be. Now, in terms of asset allocation, it's different, right? Because you have to build usually models around that, and 1 year doesn't change an expected return, or you don't have enough of a sample size of volatility. So that hasn't changed yet, but it's up for question. So for example, in Saudi now, they're allowing investment into certain types of real estate, through REITs, into Makkah, Medina, so on and so forth. And for us, that's massive, because we're a Sharia-compliant investment company. Everyone in the world wants to own property in Makkah, Medina and have a yield. Every mosque has £1 million in cash kept at Barclays, right, and wants to invest there. So it's currently, we're seeing how to structure that. And if that's possible, and we listed, let's say, on the London Stock Exchange, and we've listed funds before on the NASDAQ and London Stock Exchange, it's a game changer. And this was never possible before. I remember my conversation like 8 years ago with the Tadawul, in Saudi. And they're like, forget about this stuff, ETFs and dual listing, forget about it, it's not enough. But today, it's a very proactive conversation.
Absolutely, and I'm having conversations with people that are moving to Saudi. I mean, I grew up in Saudi myself, in the Eastern Province, in Dhahran. The appeal of Saudi Arabia today, the fact that I tell people I grew up in Saudi, it's as if, oh, you have insider knowledge, tell us more. And Mu'adh, I know you do, right? So tell us a little bit here. What's the appeal of Saudi Arabia?
To be honest, we want to look like safe havens for investors. With the panelists previously, they mentioned the transformation, the vision. I'm not going to talk about that. I'm going to talk about which is the topic of our panel as fintech. So fintechs basically open up a new pipeline of liquidity for local and foreigners. So you mentioned tensions, geopolitics, liquidity crunch, interest rate environment, but we haven't seen that clearly in Saudi. We're seeing a lot of injection, government support, investors who's actively doing crowdfunding, etc. So yeah, I think the region, Middle East or GCC in specific, they are hopefully a safe haven for investors.
Yeah, absolutely. And Nader, I see you nodding. I feel like there's a big thing that you want to share with us that's going to wow the people in the back a little more.
Always great at putting the right pressure. So, no, listen, I agree with everything that was said earlier. Definitely, if you look at the GCC, the Middle East, and GCC more specifically, from macroeconomic level, the numbers talk for themselves. So, from an inflation perspective, compared to all Europe, advanced economy, OECDs, we have a very limited and controlled inflation. From a growth perspective, we are expected to have in the GCC 3.5% growth this year, while the advanced economies are a little bit below 1. This story is not coming out of nowhere. This is coming because there has been several years and decades of preparation for such an environment. Will it be in the UAE or in Qatar or more recently in Saudi Arabia? Vision 2030, I think we all talked about Vision 2030, but the ambitions that it has put, the target that it has put on all levels, they are phenomenal. They are moving Saudi Arabia to another level. Will it be from becoming less dependent on oil, or the culture, what they talked about in the previous panel, or tourism, or financial services? So financial services, for instance, one of the biggest ambitions within Vision 2030, within the fintech strategy that was put, and the financial service development strategy, is they want to reach by 2030 to become one of the top 10 fintech hubs of the world by having 500 active fintechs. This is a big number. To put it in comparison, currently they are at 140 maybe. In UAE, we have around 150 maybe fintechs. So reaching 500 in the UK, we're at 1,500, but the UK is an exception. All of Europe is 1,500 as well. So to put it in perspective, we have a clear vision, strong vision that is enabling this macro growth, and that is leading to becoming a safe haven for investors, but also for employees, for entrepreneurs, etc. This is the goal. So it's not only to bring in the capital, but also to bring in the talent. So MBS recently, Prince Mohammed bin Salman recently announced that the goal is to double the expat population in Saudi Arabia, among them to bring in as many as skilled labor as possible. We'll talk about the challenges later on when it comes
Absolutely.
to the fintech and the financial services.
And you mentioned the challenges that the region is facing, but I think, Maad, I want to build on something that you've just said a little bit earlier and go to you, Junaid. Is there a liquidity crunch in the region? Are we seeing funds flow into the region? You're having conversations with people. Obviously we're coming out of COVID. The adjustments out of COVID we're still feeling them in China. They've just reopened there. But what is the image today in the Middle East? And obviously we know that Riyadh is not Dubai, it's not Bahrain, but they are very similar. They speak to each other and compete with one another as well.
Please.
So, yes, there is a liquidity crunch, obviously, with the interest rate environment that we're seeing nowadays. But again, fintechs, I think, in my opinion, fintechs are addressing this issue. How with the new funding channels, peer-to-peer lending, crowdfunding. I can give examples. Like we can have another conference.
Give us one example, and we'll be happy.
We have some trending tool nowadays, which is crowdfunding, as you all know. But I may mention prop tech crowdfunding, especially. You said liquidity crunch. Yes, we have liquidity crunch, but now we have like a couple of prop tech fintechs. They're raising hundreds of millions within 30 minutes.
How are they doing that? I'm so curious.
Because we have the right environment. We have the right factors working on perfectly. We have the government giving the support and working on the frameworks. We have the demand, and it's growing. And we have the most important thing, which is the young and tech-savvy population. Yeah. So all these three factors has its own unique significance. But It will also open up new projects. It will help, hence it will help stimulate the economy. Yes, so we're having this momentum, and it's negatively correlated with what's happening in the world.
I like that. I feel like you wanted to
Yeah,
say
because
something.
to summarize this, basically, to summarize it, when it comes to innovation in general, and more specifically for fintech innovation, we are a region that is ripe for disruption, and for the reasons that were mentioned here. So one of them, definitely the population, tech savvy, 75% penetration of smartphone, 80% willing, according to surveys, to use fintech. You have all of the right attribute for this push. And what he mentioned most importantly also is, from one side, the governmental agenda that we discussed and we touched upon, will it be the fintech strategies, all the financial services overall strategy, but also most importantly, we are starting to witness a shift in the thinking and the way of work of the regulators. Our regulators in the region are becoming on the progressive side. So we're seeing here frameworks, like he mentioned, on open banking, and we can discuss about this later because this is going to change banking the way we know it, on the banking as a service, but also we're seeing regulations on buy now, pay later, Klarna. You see all the ads on the London taxis, on the London cab. We've seen also, for instance, in Dubai, VARA, which is the Virtual Asset Regulator Authority. This is the first of its kind in the world that is going to be regulating everything related to virtual asset. Similarly, so I'm giving bits and pieces. We have 11 sandboxes. So I'm giving bits and pieces to say that actually the regulators in the region are making a very good work. And most importantly, the way they are promoting it and the way they are achieving it is through a lot of consultations. So whenever they want to launch something, rounds and rounds of consultation is preceded with all the market players, while even, I don't think this would be admitted, but giving a kind of advantage to the smaller player, to the fintechs, to ensure that they are opening up for competition and supporting innovation. So this is...
Oh no, we have dissent here. Are you disagreeing?
Yeah, I completely disagree.
Amazing, we love that. Tell us why.
Like, I'm an entrepreneur, right? We go register everywhere and deal with regulators, and Middle East comes a long way. Like, it's come far, but it's not even close to the maturity of the Western regulators, and that's the truth of it.
But is that a good thing or a bad thing?
It's definitely a bad thing.
Okay, tell me why.
Sorry.
And then I know we're going to get a dissenting view here as well.
So, it takes time, right, to upskill, to train, to have case law. It's one thing to have that right North Star and mission and go towards the right, which the Middle East is definitely going towards 100 miles an hour, right? But you need people to also have that past experience and exposure, and that comes with time. You can't really skip it. So from what we've seen, it's just much smoother, much easier, much cleaner, much faster to deal with Western and Asian regulators. Again,
I don't think we're disagreeing at this stage. We're just saying that they are becoming progressive, and there is a long way along the
Yeah, and inshallah they'll get there soon, right? When we all help that for sure. But yeah, again, actually doing business and being regulated. Let's say you had to start a business and you could pick any jurisdiction in the world, I would not start in the Middle East. You'd go there because, again, the population's perfect and it's beautiful and it's an amazing macro environment and all of that fun stuff. But the regulations aren't there. And this is specifically for finance, I'm saying, right? That being said, we are in the Middle East, so it's not like we're saying...
So how has it been for you, being in the Middle East? Is it getting easier? Are you seeing that perception from...
Oh, a lot easier. Because like 8 years ago, we'd speak with the regulator and they just look at a blank face, right? It's like, what are you talking about? And now it's, sorry, I shouldn't be rude. Now it's a much more...
This is a close circle. We're all friends here.
Because you're getting a lot of brain power now in the Middle East coming in. From Singapore, from Europe, from North America. And so you can have those conversations and actually build out. So recently we got our license in the ADGM. And it was a beautiful process, right? It was, because they have all the Singaporean regulators and their machines and they know what they're doing. And it was clean and crisp. It wasn't your usual experience with other regulators in the region that we've had. So it's definitely getting there.
And I know from a lot of my contacts as well, speaking to them, you know, expanding into Saudi Arabia is a very interesting moment right now because what they get from the Saudi Arabian population is they're getting access to this large, you know, almost user base that they can really test the pool with. In the UAE or with ADGM, you have access to a more, let's say, expat-oriented population, more tech-savvy potentially.
Yeah, so it depends. Sorry.
No, go ahead. No.
You know, so like, again, finance world, global, you know, if you look at the world, and we're an American company, the UAE is still on the gray list. So it causes us big issues. So yeah, it's great, you get money from everywhere, all of that, but it really increases your risk. And so all of these things have to be kept in mind, right? Like you can open up everything, but at what cost? So there's always a push and pull here.
Muad, I want you to step in. I feel like you have something to add here.
I'm going to look at it on a different angle because you said the regulator and still they're still young and they don't know, they don't sophisticated enough in that market. But I think the potential, the upside potential is huge.
Massive.
So yeah, so this is what we are talking about. I think Nader's mentioned the other thing.
No, and even the progress, what has happened in the last 10 years, the change of the mentality, the number of frameworks, the number of consultation, etc. Compared, in my humble opinion, compared to any country in the world, we haven't seen such a leapfrog or any region in the world, and this is.
Yeah, if I'm an investor, I would like to look at GCC countries because, as I said, the potential is huge. Okay, we have like not that maturity of regulation, but the upside is huge. So I'm going to take the risk.
Yeah, risk reward. I mean, we are taking the risk, right?
Yeah.
So we're not disagreeing. 100% worth it.
And let's take a step back now and go back to the friendly aspect of this conversation, because we've been told to be friendly as a joke.
No, if you allow me just to close on this subject, because yes, there are regulatory, because I work a lot with the regulators, so it's something dear to my heart. So there are a lot of, some regulatory gaps, but also at the same time in certain areas, they are ahead of the curve compared to the world. So will it be, for instance, the announcement by the Deputy Governor of SAMA, the Central Bank of Saudi Arabia, that they will be issuing a BaaS, a banking as a service framework. Banking as a service, for those who don't know, it's basically when a bank lends its capabilities, its balance sheet, its license to distributors. So take the example of Apple and Marcus Goldman Sachs. How when they issued Apple Card and now Apple Deposit and Apple BNPL, buy now, pay later. So they lend the capabilities and you end up buying the product, financial product, end-to-end from a distributor, a non-bank distributor. In the whole world, there are very few places where it's regulated. And this is leading to some problems and some challenges. One of them is Apple Card actually having a much higher NPL, NPL than subprime cards. So in Saudi Arabia, they saw that this is going to be the future. They announced that by end of the year, they will be issuing a framework. Similarly, buy now, pay later. In most of the jurisdiction, correct me if I'm saying something wrong, it's not regulated. And this is also, everybody is using today, buy now, pay later. They started the consultation for the regulation. So they are bridging the gap. In certain more traditional areas, maybe they still need to work on it, but when it comes to banking of the future, they are trying to put the right setup.
If I may add an example from my incredibly humble experience, in comparison to the three panelists here, a couple of years ago, I had a stint where I covered cryptocurrency in the region, or globally, to be honest. And this was at the time when I think Bitcoin was at $2,000 or something marginal like that. Did you buy back then? Oh my God, please don't ask me that. I can't. This is a heartbreaking conversation, so we're going to jump over that. But incredible at the time because there were a lot of jurisdictions that were trying to jump to regulate cryptocurrencies. So you had Malta, you had a lot of the banking companies go to Zug in Switzerland. But what a very interesting central bank did in the Middle East, which was in the Bahrain, they created a sandbox kind of situation where they said, okay, you can come, you can show us this technology, what it does. we can try and have these conversations about it to try and understand it, and then to gain that kind of knowledge, which was very interesting in that dynamic. You're laughing because you have something to say.
We were in all the sandbox. I would avoid it like the plague. So the sandbox for a regulator is like, we'll put you there because we don't know how to regulate you, and inshallah one day we'll change our laws.
But they did, inshallah, they did change their laws. Go ahead, go ahead.
It takes time. Yeah.
It does take time, absolutely. And with emerging tech, sometimes it's potentially better to take their time. I mean, you look at the SEC today, and they still haven't regulated cryptocurrencies.
Exactly.
So you do find that potentially there's some segue when it comes to that emerging tech. But your situation is you're in a very different sector. You're a lot more mature in terms of the access that you get. So talk to me about the challenges that you get in the region.
So
and what are some of the solutions that you suggest to deal with these issues?
Yeah, so I won't be negative here, but like 8 years ago, we were doing automated investment advisory, right? Which is quite basic, but it was new for regulators because I used to individuals giving financial advice. So they didn't have the laws, and so that's why we went through all the sandboxes, right? I would say we were one of the first, if not the first batch of even the Saudi sandbox, of the CMA and so on and so forth. We always found out that it would have been better to just wait and apply for a full license.
Why is that?
That's because, again, there's different people want different things, right? So even governments, they have a certain mandate, and the regulator has a certain mandate, and they've been told you have to push fintech, and they're like, oh man, it's a lot of work. So from what we've seen, the sandbox is that, no man's land where you don't want to be stuck. And that's what's known amongst entrepreneurs. Nobody wants to be stuck in a sandbox. So everyone's trying to avoid it. And maybe that should change. Ideally, if the regulator was very proactive, that would be great. But that's not the case as of yet from what we've seen. Now, Bahrain's always been ahead, and we dealt with Bahrain a lot, but Bahrain didn't have the infrastructure, lovely otherwise, because it's a small country. It used to be the banking capital, not anymore, it's kind of lost out. So there were no payment processors and so on and so forth, so it couldn't work. But I could see Bahrain doing it properly.
Muad, I see you, I want you to join us a little bit here and to talk to us about the role of the regulator in the region potentially, and maybe offer some recommendations here on how we can bridge that kind of, what I think is a gap potentially from what Junaid is saying between these companies that are looking to set up shop in the Middle East, but also to gain access to this wealth of user base that is just incredible to work with.
I think, but before the regulator comes and put the regulation for fintech or crypto or whatsoever, before that, the government, UAE started it and Saudi, they put the strategy first. So we have an entity called Fintech Saudi. I'm not sure if you're familiar with, but Fintech Saudi has been proactive with the industry, and they just got the approval for the strategy, and the strategy is big, and there is a huge collaboration between the entities. Anyways, back to your question. I think I understand your point, but it's just you have to read about this strategy, and you find the right entity that you can contact with, because if you contact with, I don't know, maybe, I'm not sure, maybe he's better, but if you contacted Fintech Saudi, they will guide you through incubators, they will guide you they will proxy with the regulator, whether CMA or SAMA, and they have, they get him better in order to make investors happy. Yes, I understand his point of view 4 years ago, but you know what? Before 4 years, without regulation, without a strategy, the number of fintechs has increased 15 times. Wow. With 4 billion riyal invested into fintech. So after the strategy and the regulation, I think the future is brighter, and the future is really.
Yeah, I agree. And Nada, what are some of the conversations that you're having with, with different people in the region? What are some of the challenges that they're facing, and what are the solutions? I mean, more than the challenges.
Yeah.
I'm more interested in, so what do we do next?
Yeah. So the challenges were some of the challenges were touched upon, but yes, to Muad's point, there has been an increase in funding. And in the last 5 years, the CAGR was around 55-56%. It reached in 2022 $1 billion in funding for fintechs. We're talking about the whole MENA region, with UAE, KSA, and Egypt taking almost third, and then much smaller pieces for the other countries or for the other jurisdictions. And also what's been interesting is that the nationality of the investors. So by 2022, 50% of the investors were not from the MENA region. So this is very interesting to see the growth we're seeing, as opposed to in 2018, we had one or two non-MENA investor. Now we reach a phase where we're at 50%. I'm not talking about the value, I'm talking about the actual investors. So this is a very interesting point and bright spot. However, from a funding perspective, so this is the first challenge. From a funding perspective, the region is still below par when it comes to its real fair share. So if you look at a number, for instance, in Saudi Arabia, the total VC funding beyond fintech, and fintech, by the way, represents around 40-30% of the total funding in the region. So the total VC funding for Saudi Arabia represents 0.08% of the VC funding globally.
That's incredible.
While the GDP of Saudi Arabia represents almost 1% or 0.9% of the global GDP. So this gap still needs to be bridged.
But why does the gap exist?
We were late in the game in a big portion when it comes to, from a cultural perspective, encouraging startup. Startups is a whole ecosystem that includes, and I'm not talking only about finance, that includes the universities, that include the fundings, that include how easily you can capitalize, how easily you can go to market, et cetera, et cetera. So it's the whole ecosystem. We were late in the game. But now that we are starting to move, we saw the growth, and we're talking, it moved from 50 million for fintechs to $1 billion in less than 5 years. So this is already an excellent story. The point that I was trying to make about the 0.08 versus 1% is that I don't see it as a negative, really negative. It's more of the upside and the potential that we have. So this is challenge number one. The way it can be addressed is by keep on promoting and trying to attract foreign investors, but also for the Sovereign Wealth Fund, PIF, and the like, to start looking more into startups or to start having funds that are specialized in startup. This is on the funding side. Also, if you look at the funnel for any startup or technology company in general, you have the exit, right? So our IPO market is not mature. We're starting to see exits, and good exits. We have 2 or 3 fintech unicorns in the market. So you have STC Pay, which is it's the largest wallet that is transforming into a bank. In 2020, Western Union invested in them for a valuation of 1.2 billion. So it's great. We have Fawry in Egypt. It reached a peak of valuation of 1.4 billion. So we're starting to see, and I'm linking it back, we're starting to see exits, but the majority of the exits are not public exits. They are acquisition by existing players.
Yeah.
So this one also, it's more on the environment, the financial environment and the readiness of the market. The third challenge is on the human capital and the talent. This is a big challenge. So according to a strategy and report that was recently published, if the Middle East wants to reach and the GCC specifically wants to reach its full potential when it comes to reaching the maturity, digital maturity, they're going to need 600,000 skilled tech labor. So this is a huge gap.
Yeah.
So
and I think the skilled labor issue is something that's global, isn't it? Junaid, I mean, you have
It's extreme in Saudi Arabia. So even our Saudi office and staff, it's just everyone gets poached by PIF for like double the salary every 3 months. It's madness.
Are you hiring in Saudi Arabia? Should
Always,
we tell
because
everyone?
everyone's always there.
everybody's
It's
hiring in
wild.
Saudi Arabia.
Yeah, so it's tougher than anywhere else in the world for sure right now.
And why is that? And is
Because
there
of the money being pumped in, right? And it's mainly government. So everyone's joining government enterprise. They're just paying ridiculous. They're not efficient. Like eventually it'll come down to a mature level. It doesn't make sense right
So
now.
just to give you 2 examples, and so you have something new that is open banking and open finance and API banking, which is relatively new to the region and relatively even new globally. So whenever you have one person that starts knowing, and it's a limited skill and limited availability of skill, you see the same person being poached by different government entities because of this lack, and different private sector entities. Similarly, anything, so the biggest fintech, from a fintech perspective, the biggest sub-industry is payment.
Yeah.
And you see people moving from Saudi payment to a startup, to a bank, to etc., because there is a need. So here, this marries back with, or links back to the original point that I was saying, that we're going to see a growth in the expat population, and the numbers that are being announced are a doubling from now to 2030.
Maad, I see you nodding.
No, I agree with Nader, because I think the government is addressing this issue with the expat vision. They want to double the expat number in Saudi, the talented people, and we're seeing this today. I mean, Riyadh is like booming. Every day I found out that there is like a new district. So yeah, we are a green field. Yani. We're still yani, growing, but it's huge. The potential is huge, and yani, the talented people. I mean, the turnover is high, but I see it as a positive sign, because these kind of transitions from company to company, they just exchange knowledge and experiences. So the industry is benefiting from this.
So I'm going to ask you guys a question, and then I'm going to open the floor for maybe 1 or 2 questions from the audience. If I'm a fintech today, this is a new question that I've come up with that I haven't told you guys about before. I'm sorry. If I'm a fintech today and I'm looking at the Middle East and I want to go there, what is the tip that you have for me? Junaid, I'm going to start with you.
Where in the Middle East? It's all different.
Tell me. Give me why.
Where should I go?
Yeah, where should I go? Why should I go there?
What type of fintech?
Give me an example. I don't know. Let's say crypto. Oh God, this is a
Oh my
terrible
goodness,
example.
really?
This is a
Yeah,
terrible
that's a bad
example.
example. No, don't do that
let's say
one.
payments or open banking. Let's do that. I'm your competitor. Oh, that's worse.
Yeah, okay. And it's purely money driven.
Yes.
What's your nationality?
Why does that matter?
It matters.
Why? Tell me why.
Oh, you don't want to go there. Okay. I'd still go to Saudi at
You'd
this
still
point.
go to Saudi.
Yeah, right now, for like the next 3 to 5 years, I'd say I'd go to Saudi.
Okay.
Yeah.
All right.
It's-
Maad?
Yeah, there is studies, 50% of population are using fintech.
Yeah.
So we
Okay.
have
Nader?
Yeah.
Listen, it's not a black or white question or with a black or white answer. So it really depends what you're optimizing for. Definitely, Saudi goes without saying is the biggest market with the largest potential. But also, if you look at it from different side, the UAE is the ease of doing business is better at this stage. Saudi is improving a lot. So it's really, it depends on what you want to do and how do you want to do it. But the whole region is exciting. There are a lot of potential in the whole region across payment, even crypto. So crypto, forget about now the Bitcoin and the FTX. And so recently, 6 months ago, or Rain, which is a crypto exchange company, they raised $110 million.
And they started in the Bahrain Central Bank sandbox.
Yeah, but you know, Noor, like what's interesting is even the investment in the Middle East, we're measuring like Middle Eastern institutions and family offices and so on and so forth. but there's a lot of wealth kept outside that's actually decided in the Middle East. So we have many shareholders, and the money is from London and New York and so on and so forth, but they're sitting in Dammam or Riyadh, and we go meet them, and then the money. So that's not going to be measured in those reports, right? It looks like it's coming from America or Silicon Valley or wherever, but it's purely Middle Eastern money, and there is that bias, there is that preference. So I think the money is there's layers of money. It's more than enough, yeah.
Okay,
and if you have a good business, you wouldn't have to worry anyways. You can get money anywhere in the world, right? So you should focus on that. I don't think you should focus on.
What I love, the answers I got from the three of you, if I were to summarize them, is yes, come to the Middle East. I didn't get, oh no, don't go. No, yes, come to the Middle East. Okay, so I'm going to open the floor for questions. If I get the person in the lovely pink jacket, which looks amazing.
Hi, I'm Rina Aswad. I work in the asset management industry. I had a question regarding the funding. So we've seen recently Tamar app in Saudi Arabia got $150 million fund from Goldman Sachs. And I was wondering, in regards to Muad and Junaid, have you seen any difficulties in funding startups, especially fintech platforms, especially with increased interest rates? How has that affected the challenges of getting funding for your apps? Thank you.
So we fundraised now our Series B during this, let's call it a recessionary period, and there were no issues. But what the investors looked at was very, very different. So before it was, what is your growth trajectory, like all fluffy stuff. And now it's very specifically unit economics. What are your margins? What are your unit economics? When can you be profitable? When can you IPO? What are the multiples? It was very sophisticated this round. And it's not because we're at a later stage. It's just the same investors are now really worried about unit economics, and before they were not. And money will always be there. There's more than enough money in the world. If you have good unit economics and you can scale, there isn't any institution in the world that won't give it to you. It's very easy to see, right? Before that, it was easy to mask. That's the issue. So now you have a few select players who are good. Now, unfortunately, you have a lot of the lending players who are getting a lot of the money, and that's also may not be true amounts of money, because some of that investment, quote unquote, is given as like a line of credit to do their, lending business. So you have to be careful with that. And I'm also not a big fan of lending, in the whole Sharia space, and we feel it creates inequality. But in general, I don't think there's any issues in fintech fundraising. But you'd have to really focus on unit economics, which we didn't have to do before.
Maud?
Yes, as I mentioned earlier, like a couple months ago, with the same interest rate environment that we're seeing, a couple of fundraising rounds happened and just covered in a minute. So I think there's no issue in raising money, and I think our colleagues in the next session, from a VC perspective, they have the same vision, I think.
Yeah, I know the question went to them, Nader, but I saw you nodding. You have.
I don't know why she excluded me, but.
I'm going to ask you the question. Please tell us what you're.
No, I mean, I think they covered it perfectly. I don't think it's a fintech issue. It's an overall startup issue. The honeymoon phase of a huge valuation that is based on, like it was said, on numbers that are bigger. We've seen all the valuations shrinking and dropping due to the recent development. So, but again, I don't think there is a lack of funding if you have a good product, if you have a good platform. There is no lack of funding on that front.
And you brought up interest rates. Obviously, now the conversation has shifted from a macro strategy perspective, and now we're talking about when will the Fed or the ECB or the BOE pivot, so actually tech is back in vogue. Particularly with the banking crisis globally, you see that actually tech stocks have soared through the roof almost to an extent.
Which basically, and we're starting to see, I'm linking it back to the fintech world, a conversion of industries basically, where you are seeing big tech, who a lot of them sit on piles of cash, who are starting to enter this the finance world, and they are either entering it independently or in partnership with other banks, the Apple example. And this is going to happen more and more. So the paradigm shift globally, we're not talking only about the Middle East. 5 years ago, it was all the headlines were fintechs and neobanks and digital banks are going to destroy the incumbents. It didn't happen. Incumbents remained incumbent with strong positions, etc. Now we're moving into a phase where those fintechs are actually more on a collaborative mode And we're seeing this in the Middle East and globally. They are more on a collaborative mode with the banks, co-creating, etc. The threat to the banking sector shifted from those fintechs to actually the big techs and other players where, who are investing heavily in the financial service industry.
Absolutely. We're going to get one more question. Okay.
I have a question on, my name is Miraj and we run a software company in London. I have a question on open banking. We've seen in the UK, 5 years ago, there was a lot of interest in open banking and it's tailed off because banks themselves don't have a real motivation to support open banking because they don't want to support the fintech ecosystem. Yeah. So in the Middle East, how do you see the adoption is and the appetite for supporting open banking, especially from the banks?
Yeah, great question. So one, let's give a small brief on open banking. So the philosophy of open banking is that historically speaking, the customer data, due to several, given the fact that it's a heavily regulated industry and due to security reasons, the banks ended up the custodian of the customer data, the customer financial data, which created a huge leverage for banks. If you have the data, and especially now with the advancement of AI, ML, etc., if you have data, it means you have money. So in the UK, they issued a mandate in 2018 where they forced the CMA 9, the 9 largest banks, to expose the customer data to third parties, regulated third parties, as long as the customer gives their consent through a very secure framework, etc., etc. So this is, as an intro, what open banking is. Open banking is the start and is the first step into a journey that would lead to an open economy and open data economy. The banks, whether they like it or no, they are forced to be part of it. And the successful banks in the UK, so if you look at NatWest, for instance, they were masters in openness on that front. They decided that, fine, the CMA is forcing me to expose this set of data. I'm going to go over and beyond. I'm going to explore new business models in API banking. Given that I'm investing heavily into this technology, which is API technology, I'm going to be exploring new models. I'm going to partner up, integrate within a bigger ecosystem. I'm going to start lending my license and my capabilities like Apple or what NatWest now is proposing in partnership with Vodeno, a Polish BaaS provider. So basically, the open banking is the first start into what will become the future of banking. And there is an interesting quote by Brett King, who's a futurist, deals a lot in banking, that says, banking 4.0 is going to be banking everywhere, never in a bank. So the future, and we started seeing it in embedded finance, you pay without knowing, Amazon Go, you just leave the store, facial recognition, checkout, etc.
It's actually incredibly scary.
It is scary.
I don't like that technology. I'm too scared.
If it's well regulated and while keeping, there will be a balance between your privacy, etc.
Absolutely, and I know. Go ahead.
Yeah, I have an answer. I'll speak very candidly to actually, help your business out. So we've dealt with a lot of the banks in the Middle East, and they just won't reply to your emails. You won't be able to. So if you're going to try to do that, you need to be with someone who's very well connected. You still have that culture of big families and contacts. And someone I know who's very successful in open banking is from like a really big family, and he gets whatever he wants in like a second. We've tried working with banks. Otherwise, forget about it. It's not going to happen, and that's the truth of it. So, yeah.
Mu'adh, I know that you had some statistics to share that we didn't get a chance to hear about. Talk to me about the penetration of open banking in the region, especially in Saudi Arabia. What are you seeing?
In my opinion, in regard to open banking, I think big banks are following fintechs right now. Like as Nader said, CCBay, and we have D360 and another bank, and potentially, I think potentially big banks will follow. So this is the future of banking, and I think banks will move to that direction, and hopefully it will be like the future of banking because it's free and affordable, more accessible and etc. So yeah, I think big banks will follow this.
Absolutely.
Open banking is still not live in KSA, by the way.
It's getting there. Okay.
Yeah.
I stand corrected. Thank you all very much for joining me today on my panel and updating my very out-of-date information. I'd like you all to join me in a round of applause for my amazing panelists.
Thank you.